If you're a part of the metals industry, you're probably aware that steel and aluminum prices are going up. They've been going up for some time. There's a lot going on right now, lots of different things going on with pricing and supply. We're going to touch base on a few of those topics today and talk about the outlook, the future outlook of the metals industry. What's up, guys? Welcome to Q&A Mondays. Welcome to the Metal Roofing channel. I'm Thad Barnett. Make sure you subscribe if you're new. We release metal roofing and metal construction content every Monday and Wednesday. Today we are talking about the metals market, specifically the steel market, and what's going on with supply, what's going on with the steel prices, and what that means for the metals industry. So all the questions we discuss are in the description down below. You can jump ahead using those quick links. I have Adam Mazzella from Sheffield Metals with me. Adam, thanks for being here. We got a lot to talk about today. So why don't we start with the steel supply? What's been going on through 2020 and into 2021? Here we're in February. Tell me a little bit about what's happening.
Sure. Thanks for having me, Thad. And this isn't a Sheffield Metals specific thing. I think this is really a definitely domestic, but really a global supply issue that I think everybody's faced with. And really what's going on is that, back when COVID really kind of took hold in the United States, early spring last year, a number of domestic mills had shut down. Conversely, some of the demand had also downticked as well as a byproduct of that. So as demand has picked back up and various economies started opening back up, demand obviously increased. Conversely, the ability to produce enough steel to meet that demand has now kind of taken a back seat, or it really hasn't been able to uptick. In our opinion, I think there's a number of things. There's a number of new mills coming online. These are more efficient, more productive mills than a lot of these older mills that are out there domestically. These older mills take a lot more to be profitable. So from a domestic steel supply outlook, I think the idea is that they want to get these other mills back up and running, these new mills back up and running, rather than fire up these old mills that are not as efficient, that are a lot more difficult to be profitable with. So if you look at, let's say March of last year through August of last year, I think things were pretty stable. But as economies really started to tick back up and construction really opened up nationally, what we've seen is a real constriction on supply. And so when things like this have happened historically, companies like us have been able to go outside of the United States and buy things. So the flip side of that is there's a lot of tariffs from 2018, the 232, that were put in place to really protect the domestic steel supply. So it's harder to go and get steel imported. A, it takes a long lead time to get steel imported. B, additionally, globally, steel is also really constricted. There's a lot of demand right now globally. There's also a lot of mills that are shut down globally. So this isn't just a domestic issue or a domestic steel supply issue. This is really a global supply issue. So as far as what's going on, really from August, September timeframe, we've seen steel jump significantly. And so really what that means is the price is scaling up, and we're not talking about a penny or two, which is pretty normal. The seeing swings a penny or two every month, plus or minus, just kind of following the market. With all of these market conditions going on, that's really kind of what's going on. It's pretty basic supply and demand. Demand is up. Supply is really been struggling to keep up with that demand.
So what does that mean for the steel price as we continuing to 2021?
So, basic macroeconomics, looking at the limited supply that's available, demand still being up, that's forcing the price up. So we're seeing increases, from August, September, October timeframe. It was about 7.5%. December took a big uptick, and it was up about 20% from August. January, it went up to about 37% up from August. And as it stands today, we're about 75% up over raw steel, bare steel pricing from August. That's very significant. And just looking at things, I don't think we're done yet. I think there's other input things that are still going to cause that price to stay up, at least for the short term.
And what does that mean then for companies that need to purchase steel on a regular basis?
So really what that means is there's very little steel to be had. I think most people that are buying steel direct from steel mills are really limited in what they can get. And I think what steel mills are looking at is historical buys with that particular mill. So where I think a lot of people 3 years ago were kind of forced to start buying domestically, or at least start thinking of transitioning their business to buying more domestic. I think that's where a lot of people have been for, let's say the last 3 years. So here we are, we're buying domestic, and now they're saying, hey, you can only buy your historical buy. So if you don't have a long track record of buying direct from mills, or if you've really limited what you've bought domestically, you're probably going to be limited in what you can buy. So conversely, what that means for us is we can buy really what we've bought historically the last 2 or 3 years from the mills. The lion's share of our buy has predominantly been mill direct. It's been predominantly from domestic suppliers. So, from our perspective, our position is that we're in a good spot to continue to service existing customers.
And like you said, this isn't just a Sheffield Metals issue. This is, nationwide, worldwide, global issue here with steel. So how does this, potentially affect the metal construction industry and trickle all the way down to the end user?
Sure. So, we are very upfront with our customers and our contractors and saying when they enter into a contract, make sure that you're providing provisions that allow for price increases that accommodate price fluctuations. In some cases, certainly not right now, but in some cases, that could actually downtrend on the price. But right now, you're really going to protect yourself from really losing a lot of profit because you're locked in. We've had some customers try to buy ahead. We're very selective on how we allow that to occur. So, the real thing to kind of keep an eye on is that making sure that you have pricing provisions to protect yourself against large price fluctuations like we're seeing right now.
So if I'm a homeowner or a building owner, interested in metal roofing or metal construction, what does this mean for me now? If I'm, looking for quotes or bids, what does this mean?
Sure. You may see extended lead times just with the shortage of supply. You may see, so if a contractor says, hey, I can get to this project in a month, and you got a bid, 6 months ago, and you're, hey, I'm John Doe homeowner, Jane Doe homeowner, ready to move on my metal roof. Your contractor could be more than a month out, even just to start the roof. Again, most people that are putting bids out there have limitations on their bid, be it 30 days, 60 days, but they also have things written into their bids about allowing for price fluctuations and things like that. So these are all things that they need to be aware of. I think homeowners looking at doing metal right now can reasonably expect to pay probably 20 to 30% more than a bid they may have gotten 6 months ago. So, looking at August of 2020 to March of 21, if you got a bid for $20,000 to install your metal roof on your home, you could be looking at an increase of $4,000 to $6,000 just because the materials. Very few other things may have changed other than materials. And I think some other things that we're starting to look at is a lot of things are increasing in price right now. We're anticipating paint increases. We're anticipating fastener increases, clip increases. These are steel-based products, but also the input that goes into paint-based products, solvents, things like that. Those are on the rise. Adhesives are on the rise. So things to kind of consider is really all of that material input cost is ticking up. As a homeowner, I think I would say just expect more at this point. It's okay to ask a contractor, hey, justify this increase, and not just take it at face value. But I think most contractors can say, hey, here's how much this panel costs today. Here's what it cost 6 months ago.
So what's the future outlook, anticipated for steel and aluminum and the metal markets?
Sure. So, I think our approach, Thad, is we don't really like to gamble with, the steel purchasing. We buy in the rhythm that we buy in. I think if anyone kind of had that crystal ball, they would do quite well and be extremely profitable. But I think, our outlook is that we are absolutely committed to getting enough steel in to take care of our existing accounts. We're going to follow the market, and we're committed to really riding this wave out. I think if customers are also getting their prices up, it's not really a storm to weather. I really look at it like being transparent all the way down the line with their end customer, saying, hey, here's what it is. This is what it is. We can wait 6 months, but there's no guarantee that the price is going to go down, or there's no guarantee that it's going to go back down to what it was, 12 months ago or 6 months ago. So unfortunately, there is no given crystal ball. Looking at the steel market, when there are spikes, they tend to correct themselves by and large, over 6 to 8 months. However, strange times right now, so really no guarantees.
Sure. And you kind of touched on it a little bit. What is Sheffield doing to help existing customers through this?
Sure. So we are really working with customers on large projects to kind of forecast and figure out their needs, see how we can stagger releases of metal. So, if they've got a project that's going to take 2 months or 3 months or 6 months and it has a large metal demand, we'll see what we can do to kind of stage that out in releases. By doing that, we're not using all of a chunk of steel at any given time or all of a chunk of aluminum at any given time. We're really trying to work closely with our vendors. Our material management team is really probably digging in and doing twice the amount of work to make sure that we have every last bit of steel we need in the right spot, and really trying not to paint things that we don't need or have a need for. So, I would say, unfortunately, there are some longer lead times associated with it in trying to adapt our business to doing things this way. We had some initiatives to bring on some new colors this year that I think we're really going to push off until we get this, just so we can make sure that we're servicing the needs that we have of the existing items, the existing accounts, and really committed to the folks that helped get us to this point.
Yeah, there's a ton going on with the market right now between the supply and the price increases. I appreciate your transparency, Adam, and sharing a little bit about the market with us today. If you have any questions, please comment down below. We'd love to answer them. Subscribe here to the Metal Roofing channel. And as always, I'm Thad Barnett. We'll catch you next time.